Okay, so the coronavirus is alive and well. The Federal Reserve cut interest rates again, and the market is crashing. In this video, I'm going to talk about my predictions for the years to come in the global financial system and what I've done to not only protect myself, but profit during this with over $500,000 of my own dollars. So this is Jake Ducey with JakeDucey.com, and this is what I personally am doing with my money and what I personally predict is going to be happening in the financial markets over the next time to come. This is Jake Ducey with I Love Prosperity, and this channel is dedicated to helping you ensure your financial freedom in a changing world. And baby, it is changing. Let's dive right into this video. Okay, so if the coronavirus is ending up being as bad as Bill Gates, for instance, says it is, which is a once in a century pathogen, here's what the Federal Reserve is going to do. And they were going to do it anyways, even if there wasn't the coronavirus. They're going to keep cutting rates. They're going to go to zero, and then they're going to go to negative interest rates. So the problem with this is that if you lower interest rates, what you're doing is you're making money cheaper. The problem with this is it only widens the wealth gap because the really, really, really rich people, the hedge funds, the central bankers, and the biggest companies in the world, they can borrow money even cheaper. So they're going to go to even bigger levels of stock buybacks. And they're going to take cheap money and they're going to go buy other assets. They're going to go buy real estate. So all this is doing is it's making things more expensive, simultaneously making the currency worth less and less and less and less and less. The trouble with this is the average American makes $50,000 to $60,000 household income. That's not really rising, but you're working the same amount of hours, but all of a sudden your money is worth less and less and less and less and less and less and less. The Federal Reserve is so stupid, or they have such interest in profiting off of their private stock portfolios, that they think the answer is to create more liquidity. Liquidity means that they're putting more money into the system, more digits, more cash into the system. The trouble with all of this is that the U.S. economy is pretty much propped up in large part off stock buybacks and cheap money. We have over $20 trillion national debt, and it grows every single year because we use deficit spending. That means that we don't have any GDP of our own in the positive, so we use debt to fund everything. And then when you consider that about 20% of the population is retiring globally over the next 10 years, baby boomers globally, and we have all these unfunded pensions, there's a bunch more liabilities there. Then you have Social Security. So they're just going to keep printing more money, which is just going to make most people more poor. And so what they're going to do is keep pumping liquidity in the markets. But there's going to be a point, because a lot of the market is propped up, a lot of the dollar rather is propped up, and the reason the dollar is so strong is because most of the other currencies are even weaker than the dollar. And there's a lot of negative already, which means that the currency is literally worthless. And this sucks if you work per hour on a salary because your money is significantly losing value, but you're still trading the same amount of time for it. So the way that this is propped up is China, foreign investors that don't have confidence in their own currency, and the Fed that prints money. They all go buy U.S. treasuries, U.S. bonds, and they park their money there. And historically, that's always been a safe place because interest rates have never really been this low. And so what happens is it's a forced savings into U.S. dollars, which props up the power of the dollar. But here's the problem. If you go to zero or negative interest rates, what you're actually doing is you're making everybody pull out of U.S. treasuries and U.S. bonds, because if it goes negative and you're not getting a return, then instead of it being a high return, risk-free situation, all of a sudden you have the inverse of that. And what you have is the exact opposite, which is you have a yield-free risk. You have a yield-free risk. You're going to lose money if you keep your money in the treasury. So eventually everyone will pull out of US dollars. And if US dollars lose faith, then every paper currency in the world will lose confidence because it's the strongest one. And so that's the danger if they go zero and ultimately negative interest rates, which you see, a lot of countries in the world doing, and a lot of the politicians and central bankers saying, we need to go negative, we need to go negative. But all it's going to do is make a few people richer and everyone else poorer and kill the currency. And so the coronavirus, who knows what's going to happen then? I'm not a scientist. Definitely wash your hands and keep yourself safe. But what that is really a pin to a larger bubble, because since the last market crash, they never fixed the problems. All they did was create a wealth effect bubble, which is basically, as a central banker, you say, okay, let's fix this by making people feel wealthier than they are. Well, how do you do that? You have to put a lot of liquidity, a lot of money into circulation. Quantitative easing is the term that you may be familiar with. All quantitative easing means is they're printing money out of nowhere and pumping it into the markets. Really, they're giving it to the banks and things like that. And then they go buy a bunch of crap for it. So it increases the cost of everything. So all of a sudden the house is crazy expensive. And then, your interest rates on the mortgage are low, but the house is so expensive and the payment a month is so expensive, which means if you rent that out, you have to charge even more for rent. And this creates this giant wealth bubble where people look at the valuation of their home, they refi their home and pull cash out. This causes companies like Apple that have billions of dollars in cash to not even use that and to go borrow money at basically for free money. And this is record level stock buyback. So everything gets inflated because there's so much money. In another video, I talked about how, I think it was in 1990, there was like $3 trillion worth of cash and money supply. And now there's, many tens of trillions. So the amount of money in circulation has just went exponentially like this. The reason is because money's so cheap to borrow, especially for rich people and for hedge funds. And so what you've seen over the last while is this giant bubble, and now coronavirus is a pin that's popping it. In response, what they're going to do is continue to lower interest rates, which is just going to cause more long-term problems, especially if they keep doing easing to solve this and they do fiscal stimulus, printing a bunch of money. This is just going to make the problem worse. So now I'm going to talk about what I'm doing to prepare for it. First of all, if you're still watching this video, make sure you hit the like button right over there on the side to support this video. I'm making this channel because I've seen these things happen for a long time, and I've stayed super low-key and silent about it, and I think a lot of people are in for a rude awakening, and I'm making this channel to help. And so please hit the like button, and please comment down below that I am attracting financial freedom. This is why it's so important to have multiple sources of income. This is why it's so important to hedge. So personally, if you look at the trend, I'm just looking at the central banks. So what are the central banks doing? The central banks are buying gold. It's at a record rate. And so Russia, China, all the central banks are buying gold at record rates. We're almost at an all-time high in gold. Why is gold this high if gold is inverse to the confidence in the markets? If the markets were at an all-time high, which they just were, why was gold almost at an all-time high? It shouldn't be. If the markets were doing good, gold should be at an all-time low. And so the reason is because there's so much cheap money. All these hedge funds and central banks been doing all these risky investments and then buying a bunch of gold, preparing for the devaluation and the lack of confidence in currencies. So I'm not telling you what you should do with your money because I'm not a certified financial advisor. I personally have went all in on physical bull. I've been doing it for a few years, physical bullion in gold and silver and mining stocks. I don't mess around with like mining penny stocks. I just stick to the 5 or 6 best companies that have high earnings. So if they're making a lot of money at lower gold prices, what do you think is going to happen when we cross 1900 and we hit a record in gold? Which it will happen very soon if the Fed keeps responding to the coronavirus by making interest rates cheaper. This is only going to accelerate the devaluation of fiat currencies, fiat meaning paper currencies. So in reality, my personal preference is physical gold and silver firstly. After I have that, then getting a little bit more risky into mining stocks, which are a lot more risky because they're not physical, of course. That's my personal opinion. In reality, whatever you decide, you may think that's stupid. That's fine. You can do whatever you want. But in reality, you need to be hedged in some way. Yeah, that's what's made a rise in Bitcoin. That's what makes people move into physical real estate. They need something that is not just a lump sum of this artificially inflated bubble. And so the very first thing that you should look at before even considering an investment is to grow your income or create multiple sources of income. If the coronavirus ends up being really bad and it really affects global production, a lot of people could lose their jobs and a lot of companies could go bankrupt. The reason for this is because there have been for a while a lot of ghost and zombie companies, meaning companies posting negative earnings that are being sold on the stock market for a bunch of money, but they're negative. They're in debt on top of that. Because debt's so cheap, they've taken huge amounts of leverage positions that they shouldn't be taking in a healthy economy. And so they're over leveraged in debt and they have negative earnings. And so if everyone pulls out of the market on these types of more zombie companies, they can go bankrupt and a lot of people could lose their jobs. And so the very first thing that's important is just to hedge. The richest people in the world all have multiple sources of income. So comment down below multiple sources of income. Comment that down below, multiple sources of income. Comment that down below, multiple sources of income. That's the first step. Now, the second step is you need to have savings. You need to try to get to 3 to 6 months savings. If you can get to 12, get there. This is money that you don't invest and you don't spend unless you absolutely need to. With such a fragile economy that's based off of so much false liquidity and stock buybacks and incredibly high prices with earnings that don't reflect the high price. We have earnings going down and price going up. That means that the stock market is divorced from actual production. It's divorced from reality. So everybody, no matter what, you should have a level of security that can afford your rent or your mortgage or whatnot to buy you time if a company got laid off. Even if the market wasn't in this position, everybody needs that. You know, it's very important because it just provides mental peace of mind and it gives you ability to not stress as much. I think the third thing people should do is consider in their free time outside of their job, keep your job, but outside of it, maybe consider going into an entrepreneurial endeavor or a business. There's a lot of benefits to this. One is you raise your income ceiling. You allow for more scalable and leveraged growth, especially with today's systems, softwares, technologies, the ability to hire people and leverage it. And also, your earnings aren't capped anymore. You've brought in things that can really exponentially grow your income, and you're no longer reliant on just one income stream, which is always very important, especially in an unstable economy. So there's also tax benefits to that, of course, that allow you to have legal write-offs that have to do with the businesses. I'm not a tax advisor or an accountant, so you can do your own research with regards to that. And again, this is just the advice that I would be giving to my friends and whatnot. So after that, I think it's important to consider if you have available capital, you have surplus income coming in, you've put away a nest egg for a base level of security, that's when it's worth starting to grow your knowledge and studying what might be appropriate places to put your money. Again, I'm not telling you what you should do. I personally have put a lot of money into gold and silver over the years. I've seen this coming for a long time. You know, obviously I didn't see the coronavirus coming, but I've seen this bubble going for a long time, and I've been preparing for it for a long time. With physical gold, physical silver, and got great positions in mining in some of the top mining companies in the world. Because what will happen, if I'm right, and I could be wrong, but if I'm right, what will happen is they'll go to zero interest rates, which basically makes money worthless. Then they'll go to negative, which makes it double worthless. So then there'll be a rush once everyone pulls out of US treasuries and US bonds. There's going to be, and people don't feel comfortable with US dollar cash, because why would you feel comfortable with cash if we went to zero or negative interest rates? That would mean the money's worthless. Everything will go up in value probably, unless there's a deflationary situation, then everything will go down. But that probably won't happen, because they'll go negative interest rates, and then they'll print trillions of dollars of money and push it into circulation to prop everything up. But what will happen is there'll be a run on physical assets. Gold, silver, houses, real estate, apartments. I mean, we'll probably see all the cryptocurrencies go up. Like everything that is, everything that has some type of a real utility will go up drastically. I've personally positioned myself with gold, silver, and the most quality mining stocks, just because I'm watching what the central banks are doing. They control the world. Whether we like it or not. And them and the biggest G20 countries, the top 20 industrial countries, have all been buying huge amounts of gold to prepare for this. JP Morgan is the largest owner of above ground silver. They've been preparing this stuff for a long time because they knew that the rally in the stock market was BS anyways. That's why I personally position myself in gold and silver. This is going to be a very interesting time in human history to be alive. It's easy to get scared when you see, you know, the Dow go down by 10%, 20%, blah, blah, blah. It's important to stick close to the people you love and don't get so attached to the computer screens and the news, just because it can drive us insane, you know, and continue to exercise, continue to work out, continue to get outside, and continue to hedge, continue to put yourself in a position for multiple sources of income. So this is Jake Ducey with I Love Prosperity, and today I just want to talk about my predictions and what's going on in the world. Of course, this is not financial advice for you. This is me sharing what I am personally doing, and I could be wrong. I don't think I am, but that's why I started this channel, because I've been seeing this for a while and now it's really starting to heat up. So make sure you hit the like button on this video right over there on the side. Make sure you hit the like button right over there on the side to send this out into the YouTube universe. More people see it. I hope more people see it, because the average person needs to really awaken to what's happening to their currency, especially as interest rates go down and money gets printed more and more and more and more and more. So make sure you hit the subscribe button and the bell notification right over there. Bell notification notifies you for new videos. Even if you're already subscribed, just double check. Have you actually hit the bell notification? It's right over there on the side. And then comment down below multiple sources of income. Comment down below multiple sources of income. And let me know what you think about this video. Am I right? Am I wrong? Am I a total idiot? Am I crazy? What do you think about all of this happening in the world? And how are you preparing to ensure your financial future in a very changing world? So have an absolutely great day. Remember, this is a very exciting time to be alive, and there still are so many things to be grateful for, and there's so many great people in the world. Today I'm grateful for my lungs, for my health, and I'm grateful that we have the technology that connects us all over the world to help us grow and continue to expand our lives. Have a great day. Make sure you hit the like button and comment down below if you think this makes sense or if I'm crazy.